Hello guys, welcome back. Obviously today I'll be talking about the trade I took on 31st of August. And I had the position till the next day, and I'll be showing you exactly what I have done and what I was looking before taking the trade. It's very simple, A to Z. So from the previous lectures or video that I post, I talk about little things that, okay, you want to see three things, right? I want to see first thing, a high time frame level. Second thing, I want to see what my time frame alignment. And the third thing, I want to see lower time frame level. So, and that video, I talk about how you can take what you trade for more fair value gap. And that is it. Very simple. So without further, let's get into this video, but I will show you before then how the trade play out. And I want you to take something from it, right? Because most people, where I almost what enter trade, like any place I use as my entry in every trade, most people will be doing the opposite of what I'm doing. Then I love that, right? Because I want to see some traders or literate trader being trapped, then I am buying or selling from that place. That is purely what I'm doing. Because even this thing, it doesn't follow what trend line, but you can become profitable trading trend line. So don't take my word for it. Go into our chat and see it. So here we'll be talking about let me share you this the screen. Now you can see the trade I took was right here. Yeah. So this is the trade I took on volatility 50. That is V50. So look at the trend. This is one hour time frame, right? Look at the trend. Look at it. So little trader will be seeing this as this is what a double top. Maybe they have their neckline here. So they want to what sell. But I'm not like that, right? So I'm not like that. So look at where I start position here. Risking all my position. I think I was risking about I think about, is it 200 or 150? Yeah, should be $150 or 200, right? I can't remember. So here, you see how I'm stacking this position here, because I know that price will what eventually go higher. So if we look at another thing here, trend line trader will take it from here. That okay, market has break what the trend line. They want to see what it returns to the what trend line for them to sell. But I'm not like that. Very simple. So look at what happened next. Look at my entry, exactly my entry. Look at it here. Look at how price. Look at it. Look at how price move in my favor. Very simple, guys. Look at it. So I end up closing my trade right in the morning. Like when I wake up, I say, okay, let me just check my chart. I had this position overnight, right? Because I know that the next target is that high that I highlighted. So let's go back to the chart and let me explain what I was looking at. So just the same thing over and over again. And if you stick to it and you are patient enough, then you understand every concept I'm teaching. So the most important thing is that don't overcomplicate it. The algorithm here is what already in complex mode. So you making it complex again is like, something is wrong, right? So what is in front of this chart you are seeing is what complex already. It's not easy. Like the programming, everything is what very complex. So the only way for you to beat this game is for you to keep it what very simple, guy. So why did I enter from here? That upon seeing this what other block here, look at this other block here. Why did I trade against it, right? That is obviously what some people will be asking. Because of these certain things I'm seeing here. of which I will not explain on this video. Why? Because this video is just mainly for what? One PD array, like only fair value gap we are dealing with here. So I will show you how we can take entry from fair value gap and not what I was looking. So what I was looking at here, why does it even necessary for price to react from here without taking this low? Yes. Why? Because you are taking this SI liquidity like. So any trader that buy here, look at it. Look at the logic here. Any trader that buy here, their stop loss will be at this low, obviously. So their stop loss will be at this low, right? So market has take that. What next? It has to what retrace. And I'm not selling this. This is the logic here. I'm not selling this until this high is taken. That's your favorite order block, right? So until this high is taken, I just know that this high is the next target. So I can sell here from here. Look at it. I have this fair value gap. I can use this fair value gap strategy. I can sell here, look for short here. I can also sell from here, depending on what if there is if there is what I'll be looking for in the lower time frame like. If the lower time frame gives me more confirmation, then I will enter. That is what I'm trying to say. Then what else do you have again? So here I was looking at on 34, this candle here, I was looking at here. What happened? I saw that, okay, market has moved. You see this massive candle, right? Market has moved. Then where can I take this trade from? That is where the problem is, right? I have to drop down to what? This is what daily time frame, right? I have to drop down to what 4-hour time frame. What am I looking at? Very simple, as I've showed you before. Very simple. So I need a high time frame level, something like this. Higher time frame level for my bias, right? So in this case, I'm looking at 4-hour fair value gap. Then the second one, I'm looking at what time frame alignment. Time frame alignment. I think it's like this, right? Then I will be looking at the third one is lower time frame level. Then here is for what I'm using that for entry. Since I'm using the 4-hour fair value gap, I'll be using my lower time frame level should be what fair value gap, typically for what entry. So, and the fourth one is very important, which is what timing. So many of you will be wondering, right, that synthetic indices, does it even have time? Do we really have to time synthetic indices? Yes, every time has what? Time. That is the basic what logic. So synthetic indices do operate on what? Time. Because think about it as your normal programming, right? Those who are into programming, right? So is every other factor. If like example now, I want to program a certain things. I will say, okay, if A and B is what, let's say is okay, right? If A and B has happened, then what am I looking for? The third element is time. And time is equals to this. Then I want it to move up, right? Very simple. That is just simple logic that we are using here. That is why they build this out algorithm. This is exactly how it's operating. So it's operating based on what time. So, and the time they are operating differ. So this is what volatilities. Every volatilities operate on the same time. They have the same what volatility at the same time. So And the time that volatility is having a massive movement, the what step indices and the rest boom and crash, they will what consolidating. Go to a chart and see. I think I have the table of this. I have the table, yeah. I have the table of this. So the first thing we want to do, we want to set our time toward New York local time. And if I'm looking at what price and I want to enter a trade, I want to look at what 7 a.m. New York local time. Just go to a chart, set it towards UTC -4. So 7 o'clock to 7 a.m. towards 11 a.m. That is for volatility indices. It moves a lot at this time. Anything from 7 a.m. towards 11 a.m. It moves a lot. So I'll grade it. Let me give it a grade of 1 of 3. I'll give it what 3. That the rate at which it moves is, let me say, okay, strong. Let's use strong. Strong move. Yeah, will happen at this time, right? So the next time is what? Anything from, I'm telling you this. So let me tell you one logic now. From 7 a.m. to 11 a.m., volatility indices, they have a strong move. Then, and at this time, the boom and crash, they move, but it's not strong. Like, it's what they literally move. That like they move relatively, but not as strong as this. Like, I don't know if I have the table, but I'm trying to finding a way to see how I can be showing the chart, because I just draw the table on my book. Yeah, I'll be looking at it anytime I want to take trade. Yeah, though I've mastered everything, so but it really help. So if you're looking at here, I have another one that is anything from 2 p.m. to I think it's 2 p.m. 2 p.m. to 5 p.m. I'm giving the time for what volatility indices. 2 p.m. to 5 p.m. New York local time. And I have the one that I call the midnight late night what move. And they really move a lot from that. That is anything from 11 p.m. to I think 2 a.m. So I have this time for what volatility indices. Then the second factor we want to talk about is what time frame alignment. This is 4 hour time frame, right? If I have what 4 hour fair value gap, what do I want to see? I want to see the corresponding time frame what alignment. And if I have this, let's say I have this, right? I have a 4 hour 4H level. Then the corresponding time frame alignment is what 15-minute time frame. And the corresponding time frame alignment for 15 minutes is what? The 1 minute stroke the 2 minute time frame. So this is how I correlate what time frame. And if you are looking at this chart, let's go back to the daily. It's 24 hour. Let me highlight this. So we highlighted this. Then 4 hour time frame. So we are here. This is where the word candle would open. That is on 31st of that August. I think that is Sunday, right? So what I'm hunting for is what fair value gap. You see this? You have this little fair value gap here. I don't know if most of you are familiar with fair value gap. Fair value gap is just what a three candle formation. You see, you have a candle here. So we have what another candle here at up, something like this. Then and another one here. So let me draw the wick. Then maybe this one will have what, a little week to the what upside. So this is not perfect, but at least it will explain it, right? I have what, another what, week to the what. So within this week, the low of this third candle to the what, high of this what, first candle, we have a gap there, right? Look at it. This is what we call what, a fair value gap. For those who are not familiar with what fair value gap. So this is what your fair value gap. So the narrative is that price will often do what, react from it and go higher. But it can what, trade through it and go to the what, downside. So you see, I'm correlating what, many factors, and this is just what, one puzzle of what I'll be looking for. So here, what I'm seeing here is I have this what, fair value gap. Then according to what my time frame alignment is, that I want to see what, this is 4 hour level, right? I want to see 15-minute displacement, which is something like this. Price will trade down like this. I have this, then I'll take it from what, another one, fair value gap, for price to continue going higher. Very simple. So let's check it. Let's check it here. 15-minute time frame. So 15-minute time frame. Look at it. I told you this thing is what, repeating over and over again. It's repeating over and over again. Look at it. As far as what, reaching the what, 4 hour fair value gap, you see what you have. I'm drawing this so that those beginners will understand what I'm looking at. I'm not looking at what pattern, right? So you see, price rate higher. What do you have here? You have a fair value gap again. That is your entry, guys. So for price to continue going higher, this is exactly what I'm looking for. Look at it. Look at the fair value gap. You have this candles low. That is the first one. Then we have this candle high. That is the first candle. So, and for this strategy, because this is not a daily time frame, right? I told you the minimum for daily time frame, the minimum target is what, 10 hour. Like if you are risking $1, you want to gain what, $10, right? But since this is for 4 hour time frame, my minimum target is for 5 hour. Because synthetic in it, they do move a lot, right? So it's unlike what the currency pair, we have what, all external factors that is the news can test to what, slow the process, right? But in synthetics, once it is going higher and we are in the right direction, it will continue going higher. So that is one thing I love about synthetic. So if you look at here now, look at it. So I want to enter using what, fair value gap. I can enter here. Your stop loss will just be at this low. What am I targeting? 5 hour. Look at it here. 5 hour. So if I'm risking $200 on this, I should what, gain, that is $1,000 in just one day, like less than one day, right? Let's call less than one day. So and this is really, really simple, guys. This is really simple. So why did I target this? That is the next what, question you'll be asking. Because even look at this, retail trader will be thinking that, okay, you have this M pattern here. Look at it. And this is the neckline, right? I don't know how they trade it. So they'll expect price to touch the neckline and continue going lower. So I'm not like that. Then look at another trader here. So those people, they call themselves a trend line trader. They'll be looking at this as a trend line break. Look at it. They can have a multiple chart. Look at it. They can have something like this, right? I don't know if I I don't know if I got it right, right? Look at it. You have first touch, third touch, the fourth, fifth, even sixth, multiple touch on this trend, and it finally broke, right? This is their movement, right? They want to enter once price what retrace to this what trend line, but I'm not looking at that. So what I'm looking at is that this we are even seeing now really give me more confidence for me to what buy from here. And it's not a lot of people that will buy from here, right? Look, like comparing the move to the downside, many of you will be what afraid to what, you know, buy from here. That is what I want. I want to buy at a place where people will be what afraid to buy and sell at a place where people will be what afraid to sell. That is like, because this move here is only for it to what entice, traders for them to watch short. Then I'm doing the opposite of it. Because why? This thing here we are seeing this high, you see this high and this high, it tells a story, right? That is where the what liquidity is. I've said it again. That is where the what liquidity is. So here at this point, price has no reason for it to continue going what lower. No, it doesn't have. It has achieved its own, aim. So there's nothing left for here for it to continue going. No, the only thing it can do now is for it to what, take out this high. So that is how I view price. So I really think this will help, and I think the next time frame to watch, according to our time frame alignment, 4-hour time frame, look at 15-minute structure like this. And if you want to enter using the 2-minute time frame, it's just the same thing. So let's go to the 2-minute time frame. The same thing. As price is hitting that level, that is what I'm looking for, right? That is what I'm looking for. Look at it. The same thing is happened over and over again. We touch this line, then move to the upside. Do you have a fair value gap? I have here. Then for price to continue going what higher. Look at this fair value gap. So I have it for price to continue going higher. Then, and if you are trading the what lower time frame, your stop loss should be what, very what, you should give what some room for it to breathe, right? You should just enter with what a tight stop loss. No, it doesn't work like that, right? So I'm buying this from this fair value gap. Then you should give it what much space, a little space for it to breathe, right? Because this is what 1-minute time frame. So it's not as strong as 1 hour time frame, the 15-minute time frame, right? So I think this will help. And the next thing we'll be talking about the concept of liquidity in the next video, right? And I really do think this will help. And if this help you, because I'm uploading this in directly to YouTube, you have to subscribe and hit the like button and comment what you'll be looking at. What do you want to see? Then I'll do the video for you. And I'm here to help you guys throughout this year. So shout out.